a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We are going to hear about ESG ETFs. And now, if you're like me and you've never heard it referred to that way, well, our ETF research director, Nina Mishra, is going to fill us in on what that all stands for. Apparently, this last year, 2019, was a good year for these, but I don't know what that stands for.
Okay, so ESG means environmental, social governance. So
Okay.
ESG ETFs or ESG funds, mutual funds as well, they focus on companies that have positive environmental, social, and governance attributes, characteristics.
All right.
They are also called socially responsible funds, SRI. That is another phrase which is used. 2019 was a record year for these ETFs. They saw a lot of interest from institutional investors and also from younger investors like millennials who want to invest according to their beliefs,
Sure.
put their money wherever their beliefs are. And also last year these ETFs saw excellent performance. Most investors believe that probably investing according to your beliefs means sacrificing some of the returns. But actually last year, some of these ETFs beat the broader market and most produced comparable returns.
Okay.
And the main reason for that was that these ETFs, they have a lot of exposure to big tech companies because those tech companies have low carbon footprint. They usually have, their practices are socially responsible. They treat their female employees better or LGBTQ employees better than some other companies. And they have low exposure, these funds have low exposure to energy, which was the worst performing sector of 2019 as well as the last decade.
So these have exposure to ETFs and mutual funds that actually cover a lot of hot button issues.
Yes. So these funds typically try to avoid weapon manufacturers and alcohol and tobacco companies, casino operators. Some of these broad funds have exposure to energy. That is because maybe those energy companies are scoring high on social and governance metrics, although they may be scoring very low on environmental metrics. So that is something investors should remember, that look under the hood. Whether your ETF still has exposure to energy and you don't want to invest in energy, then there is another ETF, ESG ETF, which is more suitable for you, probably.
All right, let's take a look at some of these. iShares MSCI Social ETF. I won't read the whole long name. DSI is the ticker.
So I have 4 ETFs today, and these are from 4 different providers and 4 different kind of flavors. So depending on what kind of investor you are, you will find one of these suitable for your requirements.
Okay.
The ticker symbol for this one is DSI. It follows one of the oldest socially responsible index, MSCI KLD 400 social index. It is the largest, one of the oldest socially responsible ETF. It focuses on 400 companies that have positive ESG characteristics, pretty reasonably priced with 25 basis points and very popular with 1.9 billion in assets under management. To learn more about this ETF, you can go to the code page on Zacks.com, read our report, articles, and also go to the external homepage, iShares web page for this ETF, and you can look at the portfolio and holdings. And as I mentioned, these ETFs have a lot of exposure to big tech. Microsoft, Facebook, Google, Visa, these are the top holdings in this ETF, and that is probably one of the reasons why it has been doing well, with 28% exposure to tech, 14% to communication, and 11% to healthcare.
All right, there's a spider one in here too. There's always a spider one in these mixes.
Yes, so this is mainly suitable for climate conscious investors because, as I mentioned, other ETFs may include some energy companies, 2, 3, 4%. This excludes all companies that have any fossil fuel reserves. So you will not see any energy related company there. So if you are worried about some of the recent climate disasters and you are concerned that you don't want to invest in those companies, then this is suitable for you. So this would provide performance which is very much like the S&P 500 index minus energy. Not very different from S&P 500 because energy now accounts for only 4.3% of the S&P 500 index. Energy shares have gone down so much in the past decade that energy share has come down significantly.
Interesting.
Charges just 20 basis points for expense. You can go to our quote page for this ETF, and from there you can go to the external home page for SPDR and take a look at holdings and other details. And this would look very much like an S&P 500 ETF minus energy, of course. So, as expected, Apple, Microsoft, Amazon, Facebook, and Berkshire are the top holdings.
Just to mention a few, Nuveen has a large cap growth ETF of this nature.
Yes, so Nuveen has a suite of ETFs that can be used as portfolio building tools. So you have large cap growth ETFs, small cap ETFs, which are very much like the broad market, but just focus on companies that have positive ESG characteristics. It charges 35 basis points. I included this one because this is the best performer among large, broad ESG ETF because it focuses on growth companies, large cap growth companies, and growth has been outperforming value. Last year it did very well, and over the past decade also it has been doing very well. So again, you can go to the quote page on Zacks.com, and from there you can go to the external home page. And you can look at this particular ETF and other Nuveen ETFs that are ESG focused. Now this has higher exposure to information technology than DSI and other growth areas like consumer discretionary too. Microsoft accounts for more than 9%, and then Alphabet, Visa, MasterCard, Adobe, these are some of the top holdings.
And Invesco has a clean energy ETF.
So this is the top performing among all socially responsible or ESG ETFs, but investors should remember that this is going to be the most volatile too. If you look at its performance over the past decade, it's been all over the place. So last year, energy companies did very well because, with recent technological advances, the cost of alternative energy has been coming down, and some of the recent government regulations also favor alternative clean energy companies. It focuses on clean energy and energy conservation companies. It is most expensive of the ones that we discussed. And
well, you
has
pay for quality, that's for sure.
Yes. To learn more about this ETF, you can go to the external homepage, and from there, quote page and external homepage of Invesco for this ETF, and learn more about the ETF and its top holdings. And as I mentioned, some of the solar and clean energy companies did very well last year. In fact, companies like Enphase Energy up more than 400% over the past 1 year. SolarEdge up more than 200% over the past year. Tesla has doubled in the past few weeks itself. But it will be more volatile compared to others that we discussed that investors should remember.
Yeah, that's a story by itself as far as the volatility is concerned.
Yes. If you want your ESG ETF to resemble more like the broader market, like a portfolio building tool, then the other ETFs that we discuss are more suitable for you.
All right, well, in the meantime, how do these all stack up?
So as you can see that the clean energy ETF gained more than 53% within the last year. The large cap growth ESG ETF by Nuveen was up 37%, and the other two, they performed more or less in line with the S&P 500 ETF.
Do you own any of them?
I do not.
All right, thank you for that. Thank you for explaining what those are to me. I appreciate it. Don't forget, always more ETF information on Zacks.com in the ETF section. Use the Funds tab in the top toolbar to help get you there. And don't forget Nina's podcast, ETF Spotlight. It's in the podcast section of the website. Podcast button all the way at the bottom of the home page will help take you there. And in the meantime, for a limited time, don't forget you can follow some of Zacks' market insights, buys and sells, and other recommendations from the recommendation portfolios. You can do it in real time for a limited time for only $1. And for more information on that offer, all you need to do is go to Zacks.com/promo. With Nina, I'm Terry Ruffalo.
You guys are clear.
All right, we're done.